We're going from artificial intelligence to augmented intelligence, where AI is being used to help the employee do their job faster and better.
We're seeing improvement in the reduction in revenue leakage at a time where the economy is being able to find every dollar is absolutely critical.
It's time that they apply some of this digital transformation capability to the back end.
Banks need to create efficiency, they need to manage expense, manage profitable growth, and of course manage risk and compliance.
Security and compliance seems to be the top of mind with everyone.
Hello, welcome to the Icertis Industry IQ vlog series. We're kicking off this video blog to bring you contract intelligence insights that can help to transform your business. We're starting our series with several episodes focused on banking, proudly brought to you with Microsoft and Accenture. Today we'll set the stage for our series and we'll invite you to come back and hear more from the experts that we have today on our panel. Throughout our discussions, we'll share thoughts on the important role that contract intelligence is playing within financial institutions today, share how contract intelligence with the right technology can help to meet today's challenges, and offer resources that you can leverage in your strategy for 2023. Let's go ahead and get started. My name is Jeremy Scaling. I'm the Director of Product Marketing for the Financial Services vertical here at Icertis. And I'm excited to be here as we continue our growth within the financial services vertical, and I have a great opportunity to work with leading brands from around the world. Today I'm joined by a panel of experts. And after our discussion today, I will conduct further one-on-one deeper dives with each guest to further explore the topics that we're discussing. And let me quickly share why we are coming together with Microsoft and Accenture to start this video blog series. At Icertis, we believe in the power of partnerships and that partners are integral to helping our customers turn their contract management goals into a reality. Specifically, we're working closely with Microsoft and Accenture to bring more value to our clients than you'd realize by engaging any one of us alone. We have multiple examples across the industry where customers have benefited from our united approach, and the lessons learned and best practices from these engagements will further empower future customer success. Now let's get to know our panel of experts. I'd like to begin with Fred Kim from Accenture. Fred, would you like to introduce yourself?
Thanks, Jeremy. Hi, everyone. Thanks for having me. My name is Fred Kim, and I'm a managing director of Accenture, and I oversee our North America finance and risk services for the banking industry. And I'm our global contract lifecycle management and contract intelligence Icertis practice lead as well. As you may know, Accenture is a global professional services company with a 360-degree value partnership with both Microsoft and Icertis. We have leading joint capabilities to help financial institutions realize the value in their contracts. There are many considerations when traversing the journey to contract intelligence, and Accenture knows these firsthand as we have implemented Icertis internally ourselves. In addition, we've helped multiple financial services company clients to identify how they can maximize their value from contract intelligence by defining use cases and implement Icertis to achieve those business objectives and value. We are incredibly excited to share our insights and the value achieved by our clients.
Next from Icertis, I would like to welcome my colleague, Jim Bernick. Jim, would you like to introduce yourself?
Sure. Thanks, Jeremy, and hello, everyone. My name is Jim Bernick, and I'm the Senior Director for the Banking, Financial Services, and Insurance vertical here at Icertis. My background prior to joining Icertis has predominantly been within the banking and financial services industry, with over 30 years of experience between GE Capital and Bank of America in roles focused on driving growth and productivity through innovation and new product development, digital transformation initiatives and customer experience, and technology transformation. I am also very excited to be here today with my fellow thought leaders from Accenture and Microsoft to share industry insights regarding contract intelligence in this dynamic and complex industry. Thanks, Jeremy. Back to you.
Great. Thank you, Jim. Icertis partners have recognized the potential of contract intelligence, and Microsoft happened to be the first customer of Icertis over a decade ago. I'm excited to have Andrew Comas with us from Microsoft. Andrew, would you like to introduce yourself?
Hi, everyone, and thank you, Jeremy, for inviting me to these sessions. I'm Andrew Comas in the Worldwide Financial Services Group covering banking digital strategy. In my over 10 years at Microsoft, I have only covered financial institutions, and prior to Microsoft, I worked 10 years at JP Morgan Chase in various risk and architecture roles, and I'm excited to be here too. I think people forget that Microsoft itself is a business. As you can imagine, we need to manage millions of contracts with our customers and our partners. And over the years, we have developed a deep 360-degree relationship with both Accenture and Icertis. And our relationship with Icertis began in 2009, and now Microsoft manages over 1 million contracts in the Icertis platform. We have leveraged our growth mindset thinking and our relationships with both Accenture and Icertis to innovate on how Microsoft runs its own business. And then we can jointly apply those innovations to our customers to deliver more value. And now we're bringing AI-enabled services along with seamless integration to Microsoft Teams, Dynamics, Word, Power Platform to deliver more value on this platform. From my perspective, we can deliver tremendous value by unlocking the power of contract data. But there are significant considerations that go along with that opportunity, and we'll be discussing those together in this vlog series.
As we set the stage for the upcoming vlogs that we'll be introducing, I'd like to give a little bit of a glimpse into what we'll be discussing. As we entered this year, the industry and the global economies are facing tremendous headwinds. Banks need to create efficiency, they need to manage expense, manage profitable growth, and of course manage risk and compliance, which is a massive expense for banking organizations. Fred, maybe to start, can you share a little bit of what you're seeing in the industry and where contract intelligence can help banks?
We're seeing, significant investments in this space. You're seeing a lot of reduction in costs. We're seeing significant improvement in contract turnaround times. We're seeing improvement in the reduction in revenue leakage. At a time where the economy is being able to, find every dollar is absolutely critical. We're seeing, large improvements in contract compliance and reduced risks end-to-end throughout the entire life cycle. And the real disruption that we're seeing is really driven by the enrichment of the data. That is, unlocking new business insights that our financial institutions hadn't been able to do or see before in a very digital way.
When you think about the economic uncertainty going on right now in this industry, and you think about how many dollars have been spent on the front end of digital transformation through customer experience and creating frictionless environments. And now where we are from an economical standpoint, when you look at, net interest income collapsing for these banks and trading fees and revenue going down, it's time that they apply some of this digital transformation capability to the back end, to operations. And I think contract intelligence fits right within that mold. Where you can digitize all of these manual contracts, where you can get an aggregated view once you have these contracts in a metadata environment and look across them. And as Fred said, be able to ascertain aggregation of risk, whether it be market risk, credit risk, counterparty risk, operational risk, or regulatory risk. Those are all things that are contained in your contract. And whether or not you're adhering to them, whether or not you are, when you have an audit done by the regulators, that you're adhering to what you've signed up for in a contract, whether it be third-party risk management or just too big to fail. Those are the things that we're seeing out in the marketplace right now, a refocusing of strategic initiative budget dollars to the operations side to become more efficient and effective in what you do.
Andrew, maybe to get your perspective, as you're out speaking with firms, what are you hearing from banking clients and what are you seeing as their digital strategy priorities for the year ahead?
Yeah, I think it's consistent with what we've heard with everyone. I mean, security and compliance seems to be the top of mind with everyone. And even just this week, the U.S. Treasury Department released its assessment and recommendations on financial services using the cloud. I think it's worth rereading the Deputy Secretary's press release, which drives home that the cloud is safe, secure, and responsible, and firms leveraging that increase those attributes. I think the other one is just the migration to the cloud and working on what is that plan? How are you going to achieve that? And then back to Jim's point, it's a lot about doing more with less. How do I reduce my operational expenses? How do I reduce my back office expenses?
As we're talking about contract intelligence, within our suite of solutions, artificial intelligence is becoming more and more prevalent and powerful, and we're seeing this across across the industry, across all industries, just the explosion of AI and how that's being used within these platforms and how it's being used to generate intelligence and real valuable insights and data for firms. So I'm curious what you're seeing as you're talking to firms in the industry. How can banks become comfortable starting to use AI within their infrastructure?
Yeah, and I think there's two ways we look at that. I think there's one where we're going from artificial intelligence to augmented intelligence, where AI is being used to help the employee do their job faster and better. And I think most companies are more comfortable with that approach because at that point, the employee is still kind of assessing what is the output of the artificial intelligence, and we're just seeing massive time to market improvements in augmenting the employee's ability to do something. I mean, we're seeing it now in our own products where we held a meeting like this, and at the end, the transcript AI puts the summary of it. So you get like 2 paragraphs of what happened in that meeting. Is it worthwhile for me to go back and listen to the replay instead of listening to the replay to decide if I should have? So we're beginning to see things like that, and I think that's where we're going to see most of the gains, is where employees are going to be using tools to help them make assessments faster. They're still going to have to check it. I think when it's AI facing the end user outside of the bank, the consumer, that gets to be more of a challenge because the regulators want traceability. How did you recommend this to this person and not to that? Now, there are tools out there to help you do that, but it's a level of AI sophistication that I'm not sure the banks are ready to assume. But with their employees and making them more productive, I think we're just going to see a ramp up exceedingly fast on that.
If you can show that this works and it's repeatable and reproducible systematically in the bank, I think the regulators are much more apt to say, okay, you can do this, because let's face it, people turn over, people quit their job, there's a huge training issue, people aren't always the right answer either, and where you can show consistency in technology, I think the regulators are much more apt to consider it.
How can banks gain support to start a contract intelligence journey?
I think the need has to be recognized within a bank. And that need has to be recognized as they look at their expense ratio and they look at where they have to show cost out or productivity improvements. Closing branches, reducing FTE, those are all tasks that they're undertaking right now as net interest income collapses for them, and they have to maintain that profitability in their expense ratio. So to me, this is an imperative area that when they get to, they say, wow, if you look at the amount of FTE that do nothing but look at downstream systems for an ISDA contract, for example, on the sell side, and have to go into 5 different other systems, and we're hearing some of this verbatim by our existing clients, tier 1 banks out there, the number of people that have to take part in making sure that all of these systems talk to one another and provide the correct data to adhere to contracts, terms, clauses, tables, those type of things. I think once a bank realizes that and fundamentally creates the business case around the ROI associated with it, that's the impetus for them to reach out or understand that this can be so much better if we centralize this within the organization or within the enterprise.
We often hear that we have limited budgets, so we need to prioritize what we focus on this year. I think developing a value case upfront on the values, both I'll say economics, as well as process automation, timeliness of decisions, all the different types of cycle times that will be improved by this, and the use cases they expect to be able to enable that they haven't been able to do before, is absolutely critical, is developing that value case. In fact, with a couple of our clients, we're doing this and we're helping them measure it as we execute and implement so that they can demonstrate that there is real value so they can expand it to other lines of businesses to continue to expand the solution across the enterprise.
Thank you to our panelists and for all the insight that you've been able to offer today. And as I mentioned as we started the series, we'll dive into these points in more detail over the next few vlogs. And I'm excited to dive into these conversations with each of our guests. Before we wrap up, I just want to leave the audience with one thought. How will you navigate the challenges ahead in 2023? And do you have the right platform, data, and processes to meet these challenges while also leapfrogging your competition? Will you emerge from this economic uncertainty a stronger organization, or will your company be at risk? And as mentioned on our webinar with Forrester back in February, Ala Valente, who is the Forrester CLM and GRC analyst, encouraged firms to meet these challenges now and not wait until you're backed into a corner. I encourage you to follow our series to gain insight that will help you to meet your goals. Sign up now to receive the vlogs once they are released. And along with our vlogs, we'll also share information to help you tackle the challenges in 2023 and take advantage of everything that Accenture, Microsoft, and Icertis have to offer you. All the best for now.